Hello and good afternoon to all the participants. On behalf of India Factoring and Finance Solutions, I welcome you to today's live session on the way forward for India's SME sector. I am Ramanathan and I handle risk management for South Zone at India Factoring. I will be your host today. India Factoring started its operations in the year 2009 and is registered as an NBFC factor with RBI and holds an AD3 license. We provide customized working capital solutions predominantly through the factoring product. The company is a subsidiary of FemBank based at Malta. India Factoring's flagship offering, the non-recourse factoring product, allows customers to avail post-shipment facilities without recourse, which means that the facilities availed do not appear as a borrowing or as a liability in the balance sheet. Our guests today are two highly acclaimed personalities in their respective fields of specialization. Let's welcome our first guest, Dr. Bharat Kulkarni. Dr. Bharat Kulkarni is founding director of Stalwart Management Consultancy Services, a consulting firm working in the field of policy advisory and development of agribusiness and structured finance. He has worked for about a decade on various agribusiness development projects and structured markets initiative in frontier economies. His special area of interest is the development of the SME sector, and he has been working on transforming SMEs to be part of global value chains. He is the national chairman for Indo Global SME Chamber and Maharashtra state president for the Confederation of Micro, Small and Medium Enterprises. Thank you for joining us today, Dr. Bharat.
Thank you. Thank you. Thank you for inviting me.
Thank you. Allow me to now introduce Mr. Puneet. Mr. Puneet Singh Bhutani is a seasoned banker with a demonstrated history of success in the financial services industry. He has over 22 years of rich and insightful experience in banking with expertise in corporate and retail banking. He is an expert in factoring, trade finance, working capital lending, corporate finance, and structured trade products. He is a postgraduate in information technology and holds multiple certifications in international factoring. In his current role, he has transformed India Factoring's North region into a high growth region over a very short span of time by driving the export factoring business. He is also managing the company's strategic tie ups with various banks and financial institutions. Before joining India Factoring, he was working with Yes Bank and HDFC Bank, handling multiple locations across North India. Thank you for joining us, Mr. Puneet.
Good afternoon, Ram, and good afternoon, Dr. Bharat. Looking forward to the discussion.
Okay, so let's get started. India had more than 80.16 lakh registered MSMEs on 31st March 2022. There were a lot more, but this is the only registered number. The key clusters include Maharashtra with around 20%, Tamil Nadu with around 10.7%, Gujarat with around 8.1%, followed by UP and Rajasthan at around 7%, and the rest of the country contributes to the remaining portions. The sector accounts for 45% of India's total industrial production and 40% of our exports. Today, my first question would be to Dr. Bharat. Dr. Bharat, according to certain estimates, the Indian SME sector contribution to the national GDP is only around 28 to 30%. So, to put this in context, the contribution of this sector in Germany's GDP is around 55%, and it is around 60% in China. So, relatively, Indian MSME sector is slightly falling back. So, could you please explain what has held back this sector from its true performance?
Sure. I think MSME sector has been the backbone of most of the developed economies And in India also, if we want to be a developed economy, say very soon, we need to really strengthen our MSME sector, which has not been that strong as you see in most of the developed world. Few reasons for that. Most of the MSMEs in India, they have the primary reason for one of or when you talk to these MSMEs, one of the major reason that they find their growth restricted and their expansion restricted, their sophistication restricted, is the access to capital. Unfortunately, in India, most of these MSMEs have been either sole trading proprietorship firms or partnership firms, which are totally out of the say the organized sector in a way. And that makes it more difficult for them to access banking finance, to get into formal finance, which puts them into the clutches of the informal finance, putting their cost on the operations, and all that relatively makes them quite ineffective when it comes to contribution to the GDP. So if you really want to expand, we really need to bring them more into the organized sector. We really need to bring them more into a more structured manner. And that is where Chamber of Commerce like ours has been working very hard. Second is most of these MSMEs is a single person companies, and that is where there's a lot of say need for awareness. Government of India has brought in a lot of schemes, but in my opinion, those schemes need to be really modified to suit the purpose. Awareness creation about the international markets, awareness creation about the national markets, awareness creation about the changes in the technology front, because the world is changing very fast. And MSMEs, to keep track with that and to keep abreast with the changes, they really need exposure. You really find very difficult for a chamber of commerce like us, when we call MSMEs for discussions and all, you don't see that level of interest, especially in the say in Delhi, Mumbai, or these metropolitan areas. You still have MSMEs having that level of awareness, but in more deeper tier 2, tier 3 cities, if you go, central India, for example, Indore you go, Raipur you go, these cities, MSMEs really do not have that level of exposure. So that is another reason what I believe is lacking. The access to most of these MSMEs have developed as ancillary companies to one of the major producing company, which meant that their market is very limited. They develop themselves based on a limited market, which needs to change. They need to have better access to market. They need to be more, say, they need to go out more internationally, domestically. One good thing that has happened in India is now we are putting about 65-70% of our say domestic the defense procurement domestically, which is 75% is MSMEs. Similarly, in the international projects the government of India is financing, 75% has to come from MSMEs. So a lot of access to market has been given with them. Technology upgradations, skill not only of the technical staff but also of the members of the management or the owners of the company, because you really find that the owners of the company have been running it like a family business, and not many of them are actually open to the new ideas and the new concepts and not exposed to that. So building that technical gap is also important. Lastly, say insufficient infrastructure in terms of like cluster-based concept is very new in India. We need those type of concepts where shared services are there, shared infrastructure is there, and this could help the MSMEs to bring down their costs. So all in all, these are, and then finally, because they are more unorganized, they are more a single man company, not very exposed to the international and the national requirements at the highest level. The documentation is very weak, and that all puts that works as a circle. So documentation is weak, that does not make them eligible for say formal loans. The loan cost, the infrastructure cost, and sorry, the financing cost is higher. Financing cost being higher makes it difficult to be competitive. So those are, in my opinions, have been the reasons. A lot of work is being done on that. A lot of schemes have been brought in, and maybe 5 years down the line we would see a different sector, a different set of MSMEs emerging out of the Indian MSME sector.
Okay. So to summarize, what you are saying is that first, a lack of proper working capital or awareness, and a sort of informal sector, a highly fragmented sort of market is what is holding them back. And do you expect, and as you told that you expect the situation to improve going forward. So, recently, uh, India was now recognized as the fifth largest economy in the world, and the ease of business has been improving. The we are going up on the global scale. So, do you think that the situation is changing for this sector, and uh, how is the general market sentiment after the pandemic, and do you feel that promoters are confident of the economy going forward?
Absolutely. I think the growth rates that we are seeing today, 13.5% growth rate, a large has to do with the MSMEs. MSMEs have started to churn out their wheels. They are actually doing what they are required to do. 63% of the MSME. There's a recent study which says that more than 63% of the MSMEs are committed to their or are honoring their commitments, which is a very good sign, because there was a sense that probably the biggest hit would be to the MSMEs, and there would be a lot of loan defaults, and there would be a lot of say financial crunch that would come in, but that has not been seen. I think 63% honoring their commitment is a significant number for MSMEs, which tells
Absolutely.
them that financially they are capable enough of taking up the new challenge. They're confident enough in the market. About 75% of the MSMEs have come to the pre-pandemic level sales. They're matching up to the pre-pandemic level sales, which is another good sign, which gives us a confidence that the MSMEs are so going back to their pre-pandemic levels. They are going to, and then they're increasing their contribution. About 66% of MSMEs have actually moved on to the online platform for sales and all, which is another good sign that they have embraced the change. They have taken COVID or the pandemic as an opportunity. And given all that thing, I think the overall sentiment in the business, when you discuss with MSME entrepreneurs, the excitement is there. I think that is the biggest thing, that they're looking forward for the growth. They're looking forward for the new opening up of the economy. They're looking forward for more contribution. This pandemic has given them time to actually sit back and reassess their performance, reassess where they need to improve. And significant change has happened in their approach, which gives me a lot of confidence that the path post pandemic is very, very good for the MSMEs.
Okay, so things look good as of now. That's what you are saying. Okay.
Yeah.
Uh, Mr. Puneet, I just wanted to ask you, how do you think the factoring product can help the SME sector?
So I think Dr. Bharat is bang on, and I echo whatever he said. So we can see the similar level of excitement all around, be it a SME sector or MSME sector. So I'll take it from his first comment, what he said, that SMEs are, we say, cash starved. So capital is what is required for growth. Though there are orders, but if you don't have cash, you don't have capital, then your growth tends to get limited. So factoring is a product where we say that it is a faster access to working capital. It's a way you can use to ease your liquidity. Like you said that SMEs are not good in terms of documentation. So documentation, we say they are not in, they don't have a very healthy balance sheet. Why? Because that is the time they are growing. So once you are growing, once you're setting up a new business, getting a good balance sheet, getting yourself rated, that takes time. So when we talk about factoring, factoring is more towards how good your buyers are. It's not a seller balance sheet which we evaluate. It's a product which depends on how good your buyers are. So for a SME, I think factoring is a go-to product because it depends upon buyer credit, their track record, uh, how much orders they have. So it is a future-based funding. What is their order book and how much liquidity is required? So the funding depends upon your future orders. It's not your last year balance sheet performance. Another part which I can say is the risk is covered. So SME need not worry about buyer getting defaulted, buyer getting bankruptcy, because their payments are secured once they enter into a factoring contract, because it's a non-recourse product for them. So they can continue focus on their product. They can focus on getting more buyers. They need not worry about collections. So factoring is not only funding; it is also collections. So collection is a responsibility of an export factor like a India factoring. So they need not worry about collections. If a SME is exporting to different countries, they need not worry about having the knowledge of laws of those countries, different languages, different time frames. So that responsibility also is on an export factor. So I think there are multiple benefits which a SME can avail going for a factoring product.
Okay, thank you. So basically, what you are saying is that it's a sort of sell and forget, and focus on the core business rather than focusing on collections or chasing the customers and debt management and all that. Got it. Got it.
Right.
Dr. Bharat, there's a question from our audience.
Yeah.
The first question is, how does the capex requirement of SME sector being addressed? The SME has to compete globally, and then quality of products produced should be one of the top global standards. So, is the government of India helping the sector borrow at concessional rates? What are these schemes, and are they easily accessible?
Yes. So there are a lot of schemes, especially into technology upgradation, which the government has brought in. Whereas the government is giving up to 25% subsidies to upgradation of technologies, where it's basically capex investments. So those schemes are there. Of course, MSME has to be eligible to access those schemes. Apart from that, state level schemes are also there. For multiple states, schemes have been floated by the state governments where they are putting in subsidies for the capital investments. A lot of these schemes have been there. One thing that we are really struggling, and we are really urging the government as an association, as an chamber of commerce, as an MSME body, is to bring down the cost of say capital in terms of borrowings, the term loans, and the even the working capital loans. So when we are talking about investment into capex, the one of the major prohibition that comes across is the cost of capital, because the cost of capital sometimes is prohibitively high, which makes it difficult for upgradation of technology. So if we really want to upgrade the technology, subsidies and easier cost of capital, reducing the cost of capital is something that is required to do. Not much of that. Of course, the government after the pandemic has come in and provided a lot of say loans and pushed in a lot of capital and credit into the sector, which has helped a lot. A lot of work has been done on that front, but still specific schemes for capital, say easier capital access through SIDBI and all, we need to really improve that sector. So to sum up, I would say that multiple schemes exist. Specifically, they're sector-based schemes. For example, in food processing or into textile or into the high priority industries, there are specific schemes for subsidies for capital investments. Plus, region-wise, where the governments are giving subsidies for, like there was a time when a lot of subsidies were given for companies investing into pharma production into Himachal Pradesh. So those type of schemes exist, and they keep coming and going. So at any point of time, a lot of subsidies are available. So that's what we are.
Okay, so to add on, does the government conduct training programs? Because I have been seeing certain advertisements in the Economic Times and all these leading newspapers on a weekly basis. So are these run by the government?
Yes, yes. So the government works through its say they were called as the MSME Development Institute. So each district has, and now they are called as the say the district committee. But earlier they were called as the Development Institute. So their role was to actually bring in the skill development, and a lot of schemes of the central government of India were promoted and introduced through these developments. So the advertisements that you see is sponsored by the central government. There are a lot of work happening, trainings happening on digitization, on food processing, on number of sectors, and that's the Development Institute or the regional district office of the MSME ministry that runs these training programs. So these are very concessionalized training programs which are subsidized by the government for capacity building.
Okay, okay. Also, over the recent past few years, India has progressed well on the digitization front, and access to technology is billed as the gap between developing economies and the so-called highly developed economies and all that. So, do you think the SMEs have adopted technology over the last recent years?
I think one of the biggest revelation of the pandemic has been the openness of MSMEs to accept technology upgradation and move into digitization. Of course, there has been a lot of work done by the government as well. Government has pushed the digitization through the Digital India initiative to a large to a large extent. They have pushed this into the system, which has given open up opportunities for MSMEs to adopt the digitization, which they have done. As I said, about 66% of the MSMEs have already moved on to online sales, which is a significant number. So we can now say
Absolutely.
that 60% of our MSMEs have an access to online markets. That has been something which is phenomenal. Their internal operations have been digitized through startups like Khata Book and Bill Book, and all these type of startups have actually made it much easier. GST has pushed them towards digitization quite a bit, which has made them say move into a digital space. So all these things have been there. Mastercard and Government of India has recently launched an initiative called Digital Saksham, which is basically to enable the MSMEs to access better markets, develop better products and all, and offer better services through the digital platform, which is another very wonderful initiative which the MSMEs are embracing from both hands. I think all in all, put all these things together, the digital MSME scheme, of course, as I said. So all these things put together, I think the adoption of technology by an adoption of digitization specifically by the MSMEs has been significant. The Government of India themselves have moved a lot of their operations on digital platforms, which means that the MSMEs can now access services, and the regular RegTech, as the sector we call, a lot of regulations can actually be now complied with using the digital platform, which makes it much easier and much swifter for the MSMEs to operate. Which also requires them to digitize. So that has been another. So it has been like a carrot and a stick approach of the government, where they have made it difficult for MSMEs not digitized, and much easier for MSMEs which have been digitized. So I think that has been a wonderful revelation after pandemic.
Okay, thank you. Thank you. Mr. Puneet, how do you view the recent developments, such as the RBI allowing banks and NBFCs to offer trade credit insurance products, and setting up of platforms such as trade receivables, e-discounting systems? How do you feel this has picked up, and how do you feel this has benefited the SME sector?
I think these are very good initiatives which the government is taking along with the regulator. I think these initiatives were looked at. We were looking for such initiatives since long, so now they have already come. I think this is the need of the hour, when we can easily see that SMEs aspire to become maybe mid corporates, large corporates. The opportunity is pretty large. So if we have things like this in place, I think, like Dr. Bharat said, that SMEs are not only in the metros. SMEs are in the central land, maybe where those financial institutions are not present. Maybe they are not that educated. So once we go through in the depth of these initiatives which they have taken, even the remotest of the SMEs, now they have access to funding through all these platforms. So that is a very good step which the government is taking along with the regulator. About trade credit insurance, yeah, again, this is a wonderful initiative of the regulator, and now I think we are one of the first financial institution to have our own trade credit policy. We can offer non-recourse solutions for not only export but domestic. Again, I think there are we have come a lot forward, but then again, miles to go.
Okay. Uh, uh, Dr. Kulkarni, we have a question for you from the audience. This question is from Mr. Amit Tyagi. He asks whether there are any steps taken by the government and trade bodies to encourage exporters to avail the factoring product.
I think the government has been very keen on promoting the factoring, and say there are, as Mr. Bhutani said, that there's a lot of regulatory push towards this, which is making it much easier for say organizations like yours to actually offer these products. So I think there's definitely a push. The more pushes towards the domestic market, where they are putting everybody onto the trades, and a lot of initiatives on that. So I think there is an clarity in the government's mind that we need these products to be introduced and adopted by the industry, and a lot of policies towards that are being directed. I think Mr. Bhutani can add more on that, because he's an expert on that.
I think that is the idea all about. See, because banks can, to a certain extent, maybe they tend to focus on more towards mid corporates or large corporate, which have a very rosy balance sheet. So to get SMEs, I think Dr. Bharat said the high cost of fund is a big hurdle. So once they come to such products where the life, where the funding is on a turnover, funding is on for a small cycle, I think this product tend to focus more on that short-term requirement of liquidity. Obviously, for capex and all, banks are there and they are the go forward. But then for working capital requirement, I think this product is doing very well and will continue to do well in coming years.
Absolutely, absolutely. Dr. Bharat, my next question would be to you. How do you think the government e-marketplace initiative is shaping up? And is this an avenue of growth for the SME sector?
Oh, tremendous initiative by the government of India. I think the World Bank has already applauded the effort of the government. The World Bank has said that this is one of the most innovative solution that a country like India has introduced. The B2G portal that the government of India and the B2G mechanism that the government of India has brought in through the GEM portal, they call it the GEM, the government e-market. It has bring down the time and the multiplicity of approvals to significantly, which means that the procurement has become much easier, much transparent, much open, and much easier for MSMEs to participate into. This is not just the GEM, but the government is very clear that any procurement that the government does, majority will come from MSME, which is a significant mindset which the government has moved into, and I think that is something which is making a lot of MSMEs go forward. I think on the GEM portal specifically, there is already 10,000 MSMEs already registered. We are pushing for more. We have already crossed the 1 trillion rupee mark, which is a significant achievement to have. So all these things give us an say a confidence that this is something which is going to be a big game changer in coming years. When you see 10,000 SMEs relative to the number of MSMEs that are in India, I think one of the major reasons why they are slow to respond is not because they don't want to participate, but because there are two reasons. One, the awareness is not that deep. So that is where an organization like us have to play a role, have to move in and create that awareness. Second thing, a lot of these MSMEs need to organize their stuff in terms of documentation so that they can participate on the GEM portal. A lot of MSMEs are taking a lot of time to actually be in the right shape to participate. So I think that is where the hiccup is there. But once that is solved, I think we'll move a lot of our procurements to the GEM portal. So this has been something which is quite wonderful and has been quite game changer for the MSME sector.
I
Okay.
think I'll add few more. So I first heard about GEM portal. I think I attended one conference that was in 2018. So I think it is a quite a revolutionary thing which has happened, and I think a lot of progress has happened. If we keep on coming up with such initiatives, government is so much pro business. I think we can have significant progress in this sector.
Okay. So both of you feel that the GEM portal is a sort of game changer for the SME sector. Okay.
Yeah.
Great. We have one more audience question. This is from Mr. Vinod Chaube. Are the current labor laws in the country MSME sector friendly? Is the government of India bringing reforms in labor codes in the labor codes market? And have the MSMEs been and the I mean, there's a statement. So he's saying that MSMEs have been and are the largest employers in India, but the labor laws sort of hamper the growth. So what are the steps taken by the government to amend the labor laws?
I think the issue of labor laws is one of the pending reforms that we see as something which needs to be done on priority in the MSME sector. A lot of good things have been done by the government, but labor laws is one area where they have really not contributed that much, and that is something which is holding back a lot of growth of MSMEs. A lot of MSMEs have to spend a majority of their time on compliance issues, on labor laws, which is multiple, and you can just by bringing them onto digital platform, making it more simpler. lot of issues can be addressed, but then that needs to be done. Which I understand. Say getting into labor laws is politically sensitive, so governments are also very cautious about getting into labor laws reforms. I'll give you an anecdotal example. I was in Bangladesh a few weeks back doing a project on textile industry, and a lot of people would ask me that India is such a big company, or India is such a big country, but the organizations there, why they move into Bangladesh to set up their factories? Precisely because of the labor law problems. Because in India, anything beyond 50 to 60 workers, or maybe up to 100 workers, anything beyond that becomes a hotbed for political activities. And no entrepreneur would want that to happen with his organization, because then the efficiencies are gone, there are a whole lot of issues. So that is something that hampers the growth of MSMEs in India. That restricts them from recruiting more people, going bigger on their operations. And so this is just an anecdotal example. So I think that is an area where we really need to focus a lot. Yes, it is the largest, maybe alongside agriculture, it is one of the largest sector that employs people. And if it it is working on that sector, if it is employing more majority of the people in this country, I think we need to really look after that sector in terms of the labor laws. So I think we need to make it more simpler and more industry friendly, rather than say what we have today.
Okay. Dr. Bharat, where do you think the Indian SMEs are lacking in order to increase their standing in global value chains? And what can be done to sort of help them going forward?
I think one of the major reasons why we do not compete on the global platform is because, one, our product is not to that level of sophistication. Two, our cost is not to that level of say competition. So I think we have to reduce our cost of capital. As I said, this has been one of the major things. Allow more technology innovations to happen. Bring in more technological sophistication. We have to bring down the cost of logistics and power. I think that is another reason why MSMEs have been struggling in the international market. Awareness of the international market is a major issue. If we say 50% of our export is through MSMEs, and if you ask MSMEs, do you export? They say no. We just sell it to an intermediary somewhere in Mumbai or Delhi, and then he exports it. So I think, and this is an area where we have been working a lot. We have been working with the Exim Bank of India as well to enable MSMEs export themselves. That requires a lot of capacity development in terms of their marketing skills, their capacity to market, their capacity to produce, their capacity to package. All these things make it important. I think we need to really have a mechanism where we can promote technology collaborations at MSME levels. We do not see that much happening in India. That is one of the thing that differentiates us from China. Technology collaboration, adoption of technology, joint venture sort of things at MSME sectors have to go up. We have to have conducive laws for that. So I think that is an area where we need to really focus on.
Okay. Mr. Puneet, on the same topic, how do you think the export factoring product helps the SMEs?
Yeah, so like I said in the beginning, export factoring is a product which is, I think, need of the hour. Because if you compare it to a bank finance, what a bank would do a due diligence on your 3-year balance sheet. They would require a collateral, which is generally not available in case of a SME. Then there would be no assessment on the buyer side of the structure. So I think if a SME is looking for a growth capital, if they are looking for immediate cash requirement, easing of liquidity, they can maybe get in touch with us. I think we have a faster TAT, because the way due diligence happens through a bank is very different when a due diligence happens with a factor. So they can come to us. The facility is non-recourse in nature. Bank facility are generally debt part of the balance sheet. However, a non-recourse export factoring, or to a certain extent domestic also we have started offering, they are non-recourse in nature. So even if the buyer defaults, we don't go back to the SME for the payment. We get the payment through our credit insurance channel. So SME need not worry about collections. They need not worry about by default. They can again focus on increasing their order book. I think that are the few benefits which export factoring non-recourse product has vis-a-vis a bank finance.
Okay, thank you, thank you, Dr. Kulkarni. I'll come back to you. India has. I recently read India has around 40 UNESCO World Heritage sites, and still tourism contributes to only around anywhere between 5 to 7% of our GDP. So, what do you think can be done to improve the contribution of the tourism sector to our national GDP?
I think that is one of the major areas which over the years have been overlooked. If you ask yourself, out of the 40 UNESCO sites, how many of the sites we can easily access, that tells you the answer what needs to be done. I think we really need to improve upon the connectivity to these centers. We really need to focus upon integrated approach to develop tourism, rural industry, agro industry. All it has to come at like a package. I think we have phenomenal say prospect for religious tourism in this country. There's a lot of, and if you have seen, majority of the travel that happened after the pandemic was the real impact of pandemic subsided and the travel to open up was religious purposes. So I think we have a lot of focus, we have a lot of scope for that, but it has never been taken up as an contributor to the GDP. It has never been taken up as an important sector. Recently only the government has started to focus on that. Improvement of infrastructure is one of the major thing. Service level sophistication in terms of skill development of the service delivery has to happen if we really want to cater to the national and the international high paying say tourism clients. We really need to develop our skill sets in that. I remember I was in Dubai for a conference, and one of the government representative there was saying that we are in say 2 hours distance from half of the world's population, roughly half of the world's population. We are same, like we with Indians and Chinese are the only people who are traveling at the moment. So if you actually look at, we are at a place where, or we are somebody who can really explore tourism to a much larger extent. But we have not been able to bring in proper policies for infrastructure development. Now we have schemes like, for example, city like state of Madhya Pradesh has given subsidies to build convention centers. Now huge convention centers are built which are serving as marriage halls. Now that is not going to really add value. You need smaller hotels, smaller say tourist attractions built around the tourist destinations. So I think that is where we need to really focus on infrastructure development, the right infrastructure development, right skill development, making this sector, like the Udan scheme has been one of the major which in years to come will give the major boost to tourism, because now a lot of small cities which were closer to the to these UNESCO sites have been accessible by plane, or you can fly into those areas, which means that the international tourists will start visiting. So these are the types of thought process that we need to have. Probably that is what has been missing.
Okay.
I think I'll add here. I think logistics is one of the area where we still are far behind, maybe to a nearest competitor, that is China. Not only in terms of tourism, in terms of cost which gets added into the product at the end. See, a SME located out of a Haryana or a Punjab or a Delhi ports are very far. So the logistic cost is high at current time. It adds into the product. That's why at time our products become non-competitive.
Okay. Mr. Puneet, coming back to our the factoring product, how do you think SMEs should reach out to India factoring, and what all currencies do we fund in, and what sort of funding do we do in terms of what sort of percentages of the invoice do we fund?
Sure. So see, we have branches located north, west, and southern part of India. So one is they can reach our branches. Second is they can go to our website. We have contact details available for all the branches. There is also inquiry form where which SMEs can fill, and they will receive a call back from our side. Then they can access our LinkedIn page, Facebook page. So I think the access is pretty simple. They just have to go to our website and fill few details, and they can be rest assured they'll get a call from us. In terms of funding, we fund in all the major currencies, be it the US dollar, pound, euro, and obviously INR. In terms of percentage of funding, so percentage can be say from a ranging of 80% to as good as 100% of the invoice value. It depends upon a track record between a buyer and seller, how good, bad it is. So they can expect 80 to 100% of the funding.
Okay. Mr. Puneet, another question to you from the audience. This is from Mr. Gurinder. He asks, what is the minimum and maximum ticket size for export factoring for the SME sector in INR terms? And is it dependent on the SME's balance sheet? I guess that part is answered.
So Gurinder, minimum ticket size for us as on today is say 3.5 crore in terms of INR. In terms of maximum, we don't have any maximum cap as far as export factoring is concerned. So dependent on balance sheet. So like I said, that funding of export factoring non-recourse product is largely on a buyer's credit worthiness. So MSC balance sheet does not affect our decision to a certain extent. I hope I have answered your question.
Yeah, I guess that's sort of answered. Our other guest is sort of not. Yeah, he's back. He's back. Dr. Bharat, coming back to you. Another one more question which I wanted to ask you was, India has traditionally been an agrarian economy, but despite favorable climatic conditions, abundant sunshine, so many things, fertile lands, but still the agricultural sector finds itself in negative news, more than negative news than it can handle. So what do you think can be done to make agriculture a more commercially attractive sector, and how do you reduce disenchantment amongst youngsters in villages? Dr. Bharat, can you hear me? I guess Dr. Bharat is not able to hear me. Dr. Bharat? Okay, I guess there is some technical challenge there. He is not able to hear us. Uh, Mr. Puneet, I just wanted to ask you one more thing. The whenever exports are done, in the sort of we have seen that the government has been offering some sort of support, in the sense that the government has these schemes where the debts can be protected by the Exim Bank. How does our product differ from what government has been offering till now?
Sure. So I think you are talking about ECGC, which
Exactly,
generally the
exactly,
SMEs and corporates tend to take. Okay, so
exactly.
I'll try to see. So the model which we would like to work is we call it a two-factor model. We being part of FCI, which is a global body, we call ourselves as export factor, and the credit insurance which we call, it's covered by import factor. So if you have to compare how difference is it via ECGC or via import factor, ECGC tend to cover maybe a 80 to 90% of the invoice value. However, these banks which are located in the country of the actual buyer, they cover 100% of the invoice. So that is one of the major benefits vis-a-vis credit insurance. They tend to cover 100%, and credit insurance tend to cover maybe a 80 to 90% of the invoice value. Then when it comes to collection, because those banks who have covered the invoice, they are located in the home country of the buyer. So they tend to be more aware about how the economy is doing, how that particular sector is doing, how good, bad, ugly that buyer is doing. So they have more controls. If something bad is happening, they would be in a position to give you early warning signs, which is at times it's very difficult to expect from maybe a credit insurance which is located in India. So that is a benefit. And then if something bad happens, then the collection which those banks located in those buyer countries is far more superior as compared to any credit insurance. So collection efforts are also far greater as compared to a credit NIM. So I think these are the three top benefits which I can recall.
Okay, so basically it's a more robust and more market sensitive model that we have. Okay, got it.
Yeah, the value adds are much more.
Okay, Dr. Bharat, can you hear us?
Yes,
Yeah,
I can.
yeah. Thanks. One last question to you, Dr. Bharat. India has traditionally been an agrarian economy, but despite so many positives such as a favorable climate, fertile lands, abundant sunshine, our agricultural sector still has been only coming in the negative news. So many farmers commit suicides and all that. So what do you think can be done to pull this sector out from its current morass and make it more commercially attractive?
I think that's something which it should have been done many years back. I think as we develop, we should have developed we should have developed the right way, taking care of our agriculture. I think, but in most of the developed countries and countries which are dominated by smallholder farmers, there are a lot of vested groups that don't allow the benefits to go out, and that is one of the major reason which we are facing. I think we really need proper infrastructure in terms of storage and post-harvest handling. If we are losing about 30-35% of our production after post-harvest handling, then there is something seriously wrong. After so much of technological advancements, even if today we are losing for 30-35% and more into the perishable items like fruits and vegetables, then there is something seriously wrong. A lot of money has been pushed into building warehouses, but the business model for running a warehouse is not there. And that is something which needs to come in. We need to really bring, and with the technology, we really need to bring in the markets and the producer closer to each other. We really need to make more. Our problem is really not production, in my opinion. Our problem is marketing. Our marketing has really not been to that level which it could sustain. Yesterday, I was reading a news that the onions and garlic, which is one of the major say product which can be exported also, is selling at 75 paisa per kilo. Now that doesn't make sense to me, because in a city like Mumbai, when I am buying it at a much higher price, and 300-400 kilometers away it is being sold at 75 paisa, there is something really missing. So I think we really need to look into those. We really need to build infrastructure. We really need to bring in more technological innovations. We really need to bring in more market access to our farmers, bring the farmers more closer to the processors. I think one of the things that has happened, we are doing a lot of work on food processing. The processed food industry is really one of the high performing industry in last few years, which we really need to support. In my opinion, that's my personal opinion, that the farm laws that were brought in were very, very forward looking, that could have done a lot of benefit to the industry. But again, political reasons, politics always prevails over economics, and that's why we had to see what happened. So I think if these things come together, I think we would be more structured in our agriculture handling and marketing, which will be more effective. I have heard cases of, and I've met people who have left their jobs with. There's a guy in Nagpur, I know, who left job with Amazon. He was into the Amazon IT division. He came back to India and has started garlic farming, and is earning more than what he was earning with Amazon, which is a very significant, which tells you that the potential is there. I always say this, and I quote this from the then finance minister of Nigeria, who is now the president of the World Bank, Adesina. He used to say that the next set of billionaires in Africa are not going to come from oil, but are going to come from agriculture. And that is what we need to believe in India, that next set of billionaires are not going to come from technology or manufacturing, they're going to come from agriculture. And that is where I think we need to focus our attention. It's just getting the right business model in place.
Okay. Thank you. So I think we are coming to a close of today's session. So I would like to thank our audience and our panelists for having invested their time. I hope the last 45 to 50 minutes were quite enriching. If you want to know more about our factoring product, please do visit our website www.indiafactoring.in. Our experienced relationship managers' contact details have been provided on the website, and I'm quite sure they'll be able to help you out. So this is Ramanathan, your host, signing out. Thank you, and have a good day.
Thank you.